Hi everybody, this is Yohay Elam of ForexCrunch.com. We're doing this first test episode of the live market open for Europe and FX Street. Welcome, this is the first show, so it's an experimental format. We're gonna get feedback from you guys, and we're gonna, of course, improve every day. We have a live chat room, and we have also charts that you can look at. We're gonna talk about what's going on in markets. And okay, let's see. Chat is open and ready. And let's see what we have today on the agenda. So I guess you guys, first of all, want to look at the charts, right? So let's see. We're doing this first test episode of the live market open. So here's the euro-dollar chart. I hope you can see it on the screen. We've seen euro-dollar fall quite a lot yesterday, extending the falls actually from Friday, and trading at the moment at 111.65. That's around 300 pips below the post-Fed peak. Remember when the Fed decided not to hike and went dovish, euro-dollar climbed higher, but from there it was all downhill, as they say. So that's, of course, the main pair to watch. It had the strongest movement. It's also the world's most popular pair. Let's move on to other pairs. Pound dollar, it's also more or less following the euro, even though the Bank of England is also expected to hike sometime after the Fed. So we have it falling to 154.70 at the moment. It's quite close to support, just below it, 155.50. I see resistance, minor resistance at 155.30. And then, of course, 156. So these are the levels to watch. Moving on to dollar yen. Dollar yen, the yen is more of a safe haven currency. We've seen in recent weeks, in fact, that dollar yen is sort of hugging the 120 level, sometimes trading just a bit above, just a bit below. 120.40 was sort of a level to watch, but the recent high was 120.65. Of course, the very round number serves as a magnet. I wouldn't call it support at the moment, nor resistance. It's more of a magnet, and the pair is trading around this level. Dollar CAD, we've seen lots of fluctuations because of oil. Domestic figures in Canada have been okay, but oil has been weak, and it's been trading also more or less in a range. The peak was above 133. Now we're trading at 132.35. The pair fell quite a lot, but as you can see, it bounced off the very round 130 level. So I assume many of you don't like trading dollar CAD. It's not that popular like euro dollar, but you can see its behavior, at least in recent days, was quite good. It just bounced off very nicely from 130. 133 is resistance, and support is just below where we're trading now. At 132.20. Australian dollar against the US dollar, currently 71.37. This pair also enjoyed a post-Fed jump to 72.70. Now we're a bit lower. I see support. There's no line there, but it's at 71.20, just above this the current trading levels. And of course, the round number of 70 is significant support. And Kiwi dollar, also a pair I like. It was hit quite hard by the RBNZ, by the central bank there, but did manage to jump after the Fed. It's now at 63.20. The round level of 63.10 provides support, and we've already seen lower levels. 64.25, I see it as a resistance, and the post-Fed high of 64.55 is also a level to watch. So these are, let's just talk also about dollar Swiss. I personally don't really like this pair because the Swiss National Bank continues intervening in markets, but it's trading now at 97.40. Of course, the parity level is all important, and below 95 is all important. And we can see that it reached almost 95 after the Fed. Now it returned to the previous range. We have ongoing interventions there, and especially in Euro Swiss. Any questions so far? No? Okay, so let's move on to, let's share another screen. Let's talk about the main themes moving markets. So we have, just a moment, screen share. Here's a, well, very small presentation I made. Recent developments. Today is Tuesday. We already have over 24 hours of trade this week. We had yesterday Fed member Jeffrey Lacker, which is considered a centrist. That means he usually votes with Janet Yellen. He's not a dove, not a hawk. He still supports the 2015 rate hike. That there were some thoughts in the market that we won't have any rate hike at all, but this talk by Jeffrey Lacker gave a boost to the US dollar. Another theme in the market is, well, talk from another central bank, from the European Central Bank. They're hinting about more QE. We heard from Novotny, we heard from Linde of Spain, and we heard from Peter Pratt. All were sort of saying something like, we're ready to do more, we're ready to print more euros, weaken the euro. And that's the end result that we've seen on the chart. Now, in more recent developments, I'll put the FX Street calendar for you. And we had, let's see. I hope you can see the calendar now. Recent developments, we didn't have top tier data. Yesterday we did have US new home sales. They disappointed a bit, but existing home sales, they came out at 5.31 instead of 5.60, but it wasn't such a big deal. There was much more emphasis on the speech by Jeffrey Lacker. The Asian markets opened with good housing data from Australia. We had house prices rising by 4.7%, better than expected. All in all, the Australian dollar is influenced a lot by China, but if you look at the domestic Australian economy, there are a few good points there. For example, unemployment, and now we're seeing a fresh figure from housing, so it's not all that bad. Moving on, we had also some figures from Switzerland. We had a positive trade balance. That's not a surprise. It's a country that exports, but it's not top tier data. Later on today, we have from the UK public sector net borrowing. It shows how much the government spends. It's supposed to be a conservative government, but they do have a deficit. A bigger deficit is bad for the pound. Smaller deficit is better for the pound. Also not a top tier figure, but with the lack of other data, I think it will be watched. You can see here more figures, of course, on the calendar. The ones I'm looking at is consumer confidence in the Eurozone. As we see here, expectations stand on minus 6.9. A negative number means that consumers are pessimistic, and expectations are that they'll remain at the same level of pessimism. It's important to watch to see if their notion of the economy has worsened or not. And what I'm looking forward to, it's already Wednesday in Europe, but still Tuesday in the United States, is another speech from Lockhart. I think he has quite a lot of influence. And then from China, this is a very important figure, the Caixin manufacturing PMI. That's the flash figure for September. Why is it important? It's important for the Australian dollar. Let me get that chart back online of the Australian dollar, because China is Australia's #1 trade partner, so that's the immediate impact. It's at 145 GMT. Last time it fell below expectations to 47.3 points. That means it's a deeper contraction than expected, and we're expecting sort of more of the same, 47.5, but if we have another deterioration below 47 points, I think the Australian dollar will get a big blow. If we have a rise towards 50, the Australian dollar can recover. But it's not only important for the Australian dollar. I mean, Aussie dollar is a pair I personally like, but it's important also for the whole world in general. If you remember, one of the reasons that the Fed decided to wait was because of worries about China. So if we have weak data, that means the whole world, China today is the world's second largest economy. The whole world is looking bad, and the Fed might wait even more. And if we see some kind of improvement, some kind of stabilization, that's good also for the Fed. The Fed can continue and hike. So that's a very important figure. It's also an independent figure. Many times people suspect that the figures from China are fictitious. They just invent numbers and things like that. So this one is an independent one, so it carries more weight. Let's see what this is. Figures I talked about beforehand. Lockhart speaks again. Oh, looking again towards tomorrow, just before the show tomorrow, we have also purchasing managers indicators from Europe. So these are a lot of figures, as you can see here on the screen. We have figures beginning first in France, then in Germany, and finally for the Eurozone. Similar as China, these are fresh figures for September, initial figures, and forward-looking figures, so they carry a lot of weight. We can see here a small divergence, which is not new, between France and Germany. France is sort of wobbling around. Manufacturing is around contraction, around 50 points, while Germany is doing a bit better. And we have to see if this kind of trend continues. It has an impact on the euro because the ECB looks at this number as well. So these are the figures leading up to the show. We'll talk about tomorrow's big event is, of course, the speech by Mario Draghi, which I think will be dovish and will hurt the euro, but we'll talk about that a bit more in detail tomorrow because it's tomorrow's event. We have also more figures in the US. Let's move to, let's see what I have here more. Okay. In general, let's see if we have any questions. Not at the moment. So here are the bigger themes for the markets. Last week we had the Fed decision. That was on Thursday. We're 5 days afterwards, but it's still a huge, huge event. I think I mentioned the impact of the decision beforehand, the impact on every chart. What did we have from the Fed? So basically the Fed decided not to raise the rates. That was more or less priced in, but the Fed also went quite dovish. That means it seemed not confident enough about inflation. It also didn't feel it needed to see a bit more improvement in employment. And it cited, of course, the international developments, or in one word, China. Of course, it mentioned other emerging markets. I don't think we can look at China today as an emerging market. It already has emerged. It's the world's second largest economy. And once they said that if the US sneezes, the whole world catches a cold. So I think that nowadays in 2015, if China sneezes, I think also the world catches some kind of cold. And that was the important line. Now, the big question is for the Fed, are they scared of markets? Are they scared of the turmoil that we had in markets and they're not going to hike forever? Or can we believe Janet Yellen, and do we think that she will actually go ahead and raise rates in 2015? Now, if we listen to Dennis Lockhart, he still sees that coming. If we listen to Jeffrey Lacker, he voted actually for a rate hike. If we listen to John Williams, he also sees a hike. But, you know, the markets managed to scare the Fed once. Maybe that can happen once again. So that's still an open question. We have a press conference in October, but we have a Fed decision in October, but it doesn't have a press conference. She did say it's a live decision, but I don't think we'll have anything in October. Until December, we have just much more data coming up. We have 3 non-farm payrolls reports. We have more figures from housing, from retail sales, from everything. So I believe they will still raise rates in December, and they're just preparing the markets like they did in 2013. First, they talked about the tapering QE, then they didn't move. in September and waited until December until markets were fully ready. But if we have more deterioration, like seen, for instance, tonight from China, then maybe they'll wait again, and maybe, as some people said, call the whole thing off. But of course, this theme will continue accompanying us for a very, very long time. Another theme in the markets is what the ECB will do. The European Central Bank did make some dovish moves back in early September, and they hinted they're ready to do more. They have a decision in mid-October, and everybody's waiting to see what they'll do. We'll hear from President Mario Draghi tomorrow. Well, we've already heard from a few ECB officials. We talked about that beforehand. And I think that's why we've seen such a big move in euro dollar. Let me put that chart back on the screen once again. Euro dollar, here we go. I think that's why we've seen such a big fall. There are other reasons. Let me cite them as well. So first of all, Goldman Sachs, which has a lot of influence on markets, also said they expect to see euro dollar fall 6 to 10 big figures. That means between 600 and 1,000 pips. I don't know exactly when they said that and when they wrote that, but anyway, we already have a fall of 300 pips from the top. They have a lot of influence on markets, as we know. We also, as we said, heard from ECB officials. And in general, there's a notion in markets that if the US sneezes, as we said before, if the situation isn't good enough in the United States and it's not good enough in China, if the US is worried about China, then in other places, they should worry even more and make even more dovish moves. Now, all in all, if we look at the bigger picture for euro dollar, let me enlarge the chart for a moment. Oh, we have too many lines here. I hope your charts are a bit more tidy than these charts. Anyway, we had the big fall early in the year. It actually happened beforehand, and we reached a low of 105. Since then, we had a nice recovery, and we had a peak in somewhere here. In May, we reached 114.60, which was exactly the line that we stopped last week. Like the euro dollar, while we have so many moving parts in euro dollar, it sometimes, well, often has a nice technical behavior. And then we had it sort of trading in range for quite some time. 108.20, 108.10 was the low level. Then we had another rise. Then when we had the Chinese crisis in late August, we had it jump to 117.12. But I don't see that as a real move because it fell quite fast back down. And now we're back, well, more or less in the middle of the range. If we look at the bigger range, 108.10 to 114.60, we're more or less in the middle. So I think euro dollar is still looking for direction. Still not convinced that the Fed will raise rates in December or any time at all, and still not convinced that the ECB can move. The ECB is composed of 19 central banks. It's a currency union of 19 countries. Yes, Greece is still in there. And so we have 19 different people and even more in the governing council pulling in different directions. The Germans are not in favor of a rate of more QE. They're not in favor of QE at all. They would like to see more tough, more hawkish monetary policy. So we have to be convinced from the ECB that they're actually going to move either by enlarging QE or by cutting or by extending it beyond September 2016. Regarding the rates, in the United States, they want to raise the rates. Okay, many people don't believe they'll do that, but in Europe, they've reached their lower bound. We have a lending rate of 0.05%. And negative deposit rate. That means if you're a commercial bank in the Eurozone and you want to keep your money with the ECB, you're actually punished. You get less for your money. You get 0.20% less for your money in a year. So that encourages lending, that encourages speculating on stocks, and that encourages lending in euros and buying other riskier assets elsewhere. So I think this is one of the bigger themes now in the market. Is the ECB going to move? Okay, let's see if we have more questions. No, not yet. Well, this is the first show. Let's talk about another euro-related event. We had elections in Greece. I don't think I have a slide for that, but let's talk about that for a moment. Greeks went to the polls for the third time this year. First of all, in January, they voted Syriza in. Syriza promised to end austerity and stay in the Eurozone. Eventually, it did stay in the Eurozone and pay a very dear price. That means austerity is going on. Greeks went to the polls then in July to reject austerity, but eventually the government decided to take, a different direction. But they still trust Syriza. They still trust Alexis Tsipras. I'll try to find a picture of him to continue leading the country for another 4 years. He vowed to tackle corruption, but the Troika, which basically has a lot of control on the country, doesn't. I'm not sure that tackling corruption is their key interest. And let's put a picture of him right here. At least he did manage to defeat his opponents from both sides, the center-right New Democracy Party and the rebels from his own party that actually forced recent elections. We had no impact. I'm talking about this only now, even though it's a fresh event that happened just 2 days ago, because it had absolutely no impact on the euro so far. But I think the Greek crisis, as we know, is never too far away. It's always making a comeback. So I think we'll see more from that crisis quite soon. What's next on the agenda for Greece? Greece was forced to sign a third bailout, which was very harsh in August, with the first agreement back in July. And the first review will begin quite soon, in October, and is expected to end in November. After the first review, one of the topics on the agenda is the very hot topic of debt. I think that if we listen to the ECB, the IMF, and many others, Greece's debt is not sustainable, and some kind of debt relief will have to come. Germany opposes an outright haircut. Greece wants such a haircut, at least some kind of restructuring. The IMF currently is not in the game, is not part of the bailout, and they might join in, but they must see that there is a path for reducing Greece's debt to something more sustainable. So this is when things will come to some kind of conflict once again. At the moment, we don't have a date for that first review, but don't worry. As I said, the Greeks continue suffering, and financial markets also will tune up to Greece quite soon. So that was just a reminder. We'll have more on Greece later on. Let's see what other topics we have on the agenda today. Let's get back to the calendar. Make some preview for the whole week. I hope you can see the calendar. Okay, so let's just talk about the big events of the rest of the week, and we'll talk about each day. We'll talk about the events a bit more in detail. So tomorrow's big events, I mentioned Eurozone purchasing managers indicators from France, Germany, and then the Eurozone. The German figures are the most important ones, but also take a look at the French ones. Then we have Mario Draghi's speech. He's actually testifying in the European Parliament. It's hugely important. Draghi has a lot of impact on the euro. He, in many cases, talks the euro down. I think after the Fed went relatively dovish, after the Fed expressed concerns about China, he'll express them as well. Well, we've seen the euro falling already quite a bit, but not, maybe he can do a bit more, maybe not. We'll see. That's, I think, a key event. We have tomorrow also, we have the markets manufacturing PMI for the US. It's preliminary. It's not as important as the ISM one, but it's also something to watch. For those trading the Canadian dollar, we have crude inventories. Another speech by Lockhart. He is very active this week. Then on Thursday, at least here in Europe, we have trade balance figures from New Zealand. It has an impact on the Kiwi dollar, and we are expecting a rate cut in New Zealand in the October decision. More big events. We have consumer confidence in Germany. After a few months, this GfK figure went up for quite a few months, but then just last month it began falling. We'll have to see if the impact of the Chinese crisis, falling stock markets, has any kind of impact on German consumers. But more importantly, we have business confidence, the IFO one. Now it's expected to fall only 0.3 points, but we had the ZOO figure, which fell quite a lot. I think we'll have a big fall here because of the Fed, because of China, because of everything. That's a key event also for the euro on Thursday. Let's move on to the US on, more in Europe on Thursday. We have the quarterly TLTRO auction from the ECB. Last time it stood on 73 billion. Why is this important? If we have bigger TLTRO takes, it means less urge for more QE. That means bigger TLTRO, good for the euro, bad one, weak one, bad for the euro. It's not as important as the IFO figure, but it's worth mentioning. Then in the US on Thursday, we have, the weekly jobless claims figures. It's it's a weekly barometer of the labor market, but perhaps more importantly, this week we have durable goods orders and of course the core durables, which reflect investment. So this is sort of goes hand in hand with the long-term direction of the US economy. And we have new home sales. We had existing home sales. I said they're not that important. Even though existing home sales form the larger part of the market, when we have a construction of a new home, when we have a sale of a new home, we have much more economic activity around that. So the numbers are much smaller, but it has a bigger economic impact. And there's a good correlation between GDP growth and new home sales. So it'll be watched. I think it'll have a bigger impact on the dollar. Then on Friday, we have inflation data from Japan. The Tokyo one is more important because it's for the most recent month, and contrary to the national one, which is for the previous month. Anyway, inflation in Japan is going nowhere fast despite the extreme moves of the Bank of Japan. So this will be a key if they might raise the rates. We're expecting a rate, if they'll introduce more QE. My head is too much into the Fed, sorry. Anyway, Bank of Japan introduced a lot of QE, and it might do some more to encourage more inflation. Many are expecting such a move in October. The Bank of Japan convenes 14 times a year, and many of these meetings are not that important. But the October meeting, the October 30th meeting, might be an important one. Then on Friday, we also have monetary data from the ECB. It's not that important. But we have a grand finale with important US data. So we have the final read of gross domestic product, of GDP from the US. According to the first revision, or second release if you wish, we had excellent growth of 3.7% annualized. In the second quarter, we're expecting a confirmation of that figure. But we don't know. See your question exactly about that. So regarding, we're not expecting any upside revision from US GDP. It's expected to remain at 3.7%. which is a good figure, but basically balances out the poor 0.6% growth that we had in Q1. Anyway, I think if it falls below 3%, it'll be a big warning sign, and people will talk about the Fed postponing the rate hike to January or March or never. And if it rises above 4%, I think it'll be a bullish sign. But it's not the only figure that we have. We have also, at the same time, another figure that the Fed really likes is the core personal consumption expenditure, or core PCE. The year-over-year one is important. That's the Fed's preferred measure of inflation. It's currently stuck well below 1.2%. Well below 2%, which is the important figure, and it needs to rise further. Sorry, that's the quarterly one. Yeah, it's at 1.8. Anyway, this is it's a bit. It's looking to the past, to Q2, but it still carries weight. And then, just to finish off, we have the services PMI from the US and from market. It's a preliminary figure for September, but most of the US economy is services, so it will still be watched. And the final figure from the Michigan consumer sentiment. It's the final one. Let me see. Or, well, yeah, I think so. Anyway, it's an important one. I see here another question about Alexis Tsipras. How will it affect the price of the euro? So currently the elections had no impact on the euro. We had more or less, we have continuity. So certainty is good, but as we've seen, we didn't really see the euro climb after we got to know the election results. In general, the election results were better than expected. So, I mean, a clearer picture of markets, a clearer picture of the next government, but we still have uncertainty. I think if Tsipras goes head-to-head with the Germans, backed by the IMF regarding debt, we'll see another crisis in October and November. And, well, the situation in Greece is terrible. I think this program is not going to be successful. We can just look at the previous two programs. But so I think markets preferred New Democracy, the center-right party, to win. But in general, we don't have a hung parliament. We do have a clear decision. We have a clear government in Greece. So that's a bit calming. So once we hear that the Troika, the IMF, ECB, and European Commission begin their first review of Greece, that's when the Greek crisis will begin emerging back from the back burner and to center stage. So I think personally, Tsipras gained a lot of experience in a very intense 7 months. So I think he's more capable of managing politics and more capable of handling the situation. But we'll see. These are interesting times in Europe, as the Chinese say. We have elections coming up in Greece. Elections coming up in Spain. We have regional elections here where I am in Barcelona and Catalonia this Sunday. We have general elections in December. We also have elections in Portugal. There's a lot of discontent in the old continent. I think we'll have all these themes are always in the background, but they always emerge from the background as long as the economic situation is quite dire, as long as the unemployment rate in the Eurozone is at around 11%. So things will continue being worrisome. I wonder what you guys, what currencies you trade. I'll just say something general. We have, in recent months, more volatility, including in August. That means I advise trading more with more caution. That means less leverage. Don't take big risks. If you're uncertain about the direction of the dollar, maybe it's wiser to trade crosses. We have more long-term moves. For instance, Euro pound, for instance, is more stable than I don't know, pound dollar or things like that. That's just a general comment. I think what other topics can we cover today? This is one of my favorite pairs, the Australian dollar against the, I'm not showing my screen, just a second. So the Aussie against the US dollar is one of my favorite pairs. It has been very directional, trending down, basically. It reached, it dipped below 69 cents. The big question is here, will it stabilize or will it continue falling? I think we're just seeing another correction, a very nice correction. Chart, I think, looks relatively pretty. So is it going to fall from here? Depends a lot on what we hear from China. Depends a lot on what we hear from the Fed and what the US data says. In any case, I think it's quite a nice pair to trade. Let's see, more questions. On what else would you like to know? Let's see. Another pair I'm looking at is dollar CAD. An interesting thing about this pair is that when oil prices fall, the Canadian dollar falls as well. When oil prices rise, not that much. So I find that markets are trying to, they prefer selling the Canadian dollar. We have upcoming elections in Canada, and that's also a reason for concern. It's unclear if the current government led by Stephen Harper is going to continue, or if we have another government, or if we have a hung parliament. So that's another uncertainty weighing in the Canadian dollar. We already had prices of crude falling even more this year, dipping below $40 on the WTI. But perhaps I think after the elections, maybe we'll see a change of course for the Canadian dollar, because I think we will have a government in Canada, we will have continuity. Regarding inflation, I think it's relevant for Canada and relevant for all the world. The peak in oil was back in June 2014, and prices began falling since then. The biggest fall came in late November, if you remember. Around Thanksgiving, we had that OPEC meeting, and then prices deteriorated even more. Of course, they continued deteriorating afterwards, but that's a key point. So in November, we might see inflation in Canada, in Europe, in the United States. We might see beginning to level off. That means that the year-over-year change could be more moderate. For instance, in the Eurozone, we have just a rise of 0.1% in prices, but core inflation is 0.9%. Same thing goes for the US. Headline inflation is around 0, but core inflation is much higher. So that's around, that's what, the headline inflation could begin leveling off in November and in December. Now, yes, we did have further falls in January this year and February, but the biggest fall came with the OPEC meeting in November. Other themes we can talk about maybe tomorrow is the price of copper, which impacts of course, the Australian dollar, but it's more will have more impact from the Chinese figure than on the Australian dollar. Okay, it's now 8:40 GMT. Let's go back to the chart. See euro dollar. Okay, we had the euro dollar recovering. Okay, we had the euro dollar recovering in the first since we began the show, just a bit. Some European traders coming into play and buying some euros. It's always important to remember that the biggest fundamental of the euro is actually positive. The Eurozone has a positive trade balance, positive trade account. That means they export more than they import. That means that money is actually flowing into the Eurozone, keeping the euro bid. So what's pushing the euro down? Basically, monetary policy divergence. The Fed is about to hike sometime. They're keeping the bait out there, not letting us eat yet. And the ECB is going to introduce or set to introduce more QE. So expectations drive markets, but if we have nothing moving markets, basically, apart from speculation, which is the bigger thing, we have a bid euro. So that's the main pair already, 111.90. The low was 111.55. I see support around 111.50. It's not major. 112 is, of course, a round number to watch. 112.40 and 112.90 are levels above. Let me zoom out just a bit, and we'll see the bigger picture of a nice rise and fall. Maybe head and shoulders one if you wish. Let's see. Okay, do you have any more questions, or shall I begin wrapping up? I think I don't see any more questions. Let me refocus on let's wrap up what we said today. So I'll move back to this screen. Basically, that's a mistake. We had, so what's going on in markets now? We have a stronger dollar in the post-Fed reaction. We had a few Fed officials, Jeffrey Lacker, James Bullard, and most importantly, Dennis Lockhart, supporting 2015 rate hike, echoing what Yellen said. So despite the Fed not hiking and worrying about China, we do expect a rate hike. That's what's pushing up the dollar. Regarding euro dollar, we have ECB QE on the cards. It means we already have the ECB buying 60 billion euros per month, due to end in September 2016, but we expect the ECB to extend this. We're getting more hints. We got yesterday a few hints from ECB officials. The big event is the speech of Mario Draghi tomorrow, the testimony. That's already pushing the euro down. We'll talk tomorrow if it's already priced in or not towards Draghi's speech, because he may say just something that was already priced in, that they might do more, and then euro might go up because on the buy the rumor, sell the fact. That's a big theme that's pushing euro dollar down. Latest figures from Australia just this morning. Now it's already afternoon in Australia. We had housing that looks good. You mentioned that Australia is is weighed by the Chinese crisis, by falling commodity prices, falling copper, falling iron ore prices, but the domestic economy is not too shabby, as they say. It's unemployment is okay there, housing is okay now. The big event for the next 24 hours is data from China, the Caixin manufacturing PMI, the preliminary figure for September. That has an impact on the Fed, on Australia, on the whole world. If we have good data from China, the Fed can hike and other central banks can be at ease as well. But if the whole world is going down and China is taking us down there, we have a lot to worry. Of more, of course, it impacts a lot stock markets. For today, we have just a few not so important figures. In the UK, we soon have, we had public sector net borrowing. Let me see how that came out. So this figure from the UK came out worse than expected, a deficit of 11.3 billion pounds. Let's see if it has any impact on. Let's go back to the sharing the screen. A figure that was released during the show. Well, the pound actually is going up. We're seeing a general trend during the show of selling the US dollar, so this figure did not have much of an impact. We have later on consumer confidence, another speech by Lockhart, and as aforementioned, we have Chinese manufacturing PMI as the big event for the next 24 hours. Let me, what else? Basically, the biggest, as I mentioned before, the biggest themes in the markets are echoes from the Fed. This was highly anticipated and it has impact for a longer period of time. And the ECB's next move, that's the theme for tomorrow, Draghi's speech. So let's see if we have any last questions. Thank you, Lex. This is, as aforementioned, this is preliminary. This is a beta testing of the show. I hope you found interesting things to learn, to understand, to talk about. I welcome any sort of feedback, Mauricio as well, and it's going to be a daily show each day this hour. And yeah, broadcasting at 8 a.m. GMT, that's 4 a.m. Eastern time in the US. This is the London session, European session, when markets are at their busiest, which I find very interesting. If we don't have any last questions, I think it's time to say goodbye. And oh, it's 5 p.m. Tokyo time, just as markets close over there in Japan. And yeah, I think we've covered anything. If you have more feedback, we'll be here again tomorrow at 8 a.m. GMT, 4 Eastern, and 5 p.m. Tokyo time. And I guess that's all for today. So safe trading, don't use too much leverage, and good luck.